Hello, I'm Ant Joblin and welcome to Pink Diamond, the show that digs deep into the pink sheet markets to find diamonds in the rough. As the COVID-19 pandemic deepens across the world and London, Europe and many US cities go into lockdown, a real sense of urgency has taken grip. Governments are tasking car manufacturers to build key medical equipment, and there is a real sense of urgency to step up levels of testing. Currently, there is no vaccine or cure for COVID-19, and so testing has pushed to the front of the priority list, with firms that manufacture accurate tests appearing resilient to the broader market sell-off. Co-Diagnostics is one such firm. Formed in 2013 and based in Salt Lake City in Utah, it is a molecular diagnostics company that manufactures and sells reagents used for tests. It also intends to sell diagnostic equipment from other manufacturers as self-contained lab systems. The firm has a current market capitalization of $260 million, with revenue of $117,000 and net income of $30,000. Now, that may sound quite underwhelming, but it's not uncommon for firms in this sector and reflects last year's performance. The exciting story is how this stock has responded to the evolving crisis. Co-Diagnostics is now able to increase domestic sales to labs and others thanks to a recent change in US Food and Drug Administration policy. They are now shipping orders for its COVID-19 test kits to a dozen countries across 5 continents, and that's reflected in the share price. Let's have a quick look at the financials. Co-Diagnostics' price-to-earnings ratio is negative due to last year's negative earnings. When comparing the current price to the company's book value, we can conclude it is valued rather expensively, currently at over 70 times its book value. Compared to an average industry price-book ratio of 2.94, the firm valued much more expensively than its industry peers. Some 99% of the companies listed in the same industry are valued cheaper. However, earnings per share has grown by an impressive 20.87% over the past year, and the firm has shown strong growth in revenue. In the last year, the revenue has grown by a massive 418.18%. A current ratio of 10.02 indicates that Co-Diagnostics has no problem at all paying its short-term obligations. The same goes for its quick ratio of 9.96. Co-Diagnostics is one of the better placed companies in its industry to meet its short-term obligations, essential in this current climate. Looking to the technicals, both the short-term and long-term trends are positive, which is a very positive sign. Co-Diagnostics is part of the surgical, medical and dental instruments and supplies industry. There are 166 other stocks in this industry, and Co-Diagnostics outperforms 98% of them. CODX has an average volume of 14.3 million, a good sign as it is always nice to have a liquid stock. We can also see a pennant formation, which according to technical analysis theory is widely seen as a continuation pattern. Traders will definitely have their eyes on any potential upside breakouts as the channel narrowing completes. That's all we have time for this week. As always, make sure you do your due diligence before making any investment decisions. See you next time.